In this video, learn a simple day trading strategy for crypto that anyone can use. I'm going to focus on the entire setup for trading crypto from the sites and resources that I use. Then moving on to getting your trading screen in the right place and go through and show you a very simple method for actually making trades and identifying possible opportunities. I'm going to focus more on a short-term day trade here as it's more concise to show you in a video, but you can use a lot of the methods for any time scale. You just need to switch from a couple of the indicators to different ones, and then you can apply it to a longer time frame as well. I have some offers for you linked in the description. If you want to open an account with the platforms I use to trade, you can check out the deposit bonuses and sign up offers there at the time you're watching this video. So click those links. Also, timestamps for the video are listed in the description as well. First thing I'm going to do, come over to the trading system that I'm going to use in this video, which is Bybit. Like I said, they usually offer deposit bonuses if you're a new customer. So you put some USDT on account, they'll give you a bonus. You can check out those offers when you're watching this video. The first thing we need to do though, after we've got our trading system up and running, is really set up our Twitter. So this is where all your news feed's going to come in. This is the best, application that I see for actual real information. News websites, CNBC, that's all noise. It's not great information. So you can come and follow me if you want, but probably more important is to follow the people I follow, because I use Twitter as a resource mostly. And so you can see recently I've been trying to trade Polygon. So you can see Polygon Hermes here and a lot of other Polygon accounts. You can come down. I've got some, specific follows here, right? So Polygon Daily, if you're trading Polygon, obviously each project is going to have their own Twitter accounts. So you can see Gala Games here that I'm interested in. So there's a lot of altcoins, a lot of Cardano altcoins that I'm interested in, all following here. Not only do you have the project Twitter, which is going to give you up-to-date information about what is actually happening for that project. That is going to be the best resource for information for you. But you can see some of the big accounts that they follow and that are following them as well. And often they have very good insights and analysis of each project. This is by far much more valuable information than going to the news sites, Cointelegraph, CoinDesk. That mostly it's 99% nonsense and it's not going to help you. It's just going to be, media fodder. It's not important information. Twitter, the actual projects that you want to trade and follow, these are going to give you real information about what is happening. So for example, important news events that are coming out, things like that. That is going to be tradable information and you absolutely need to set it up. So, come and follow the people that you need to. The next thing is just to look at CoinGecko. I always have this open just to see where the market sentiment is and what's happening. 1 hour, 24 hour and 7-day price changes right here. Just a really good, simple way of seeing what's happening over time and what's going on. So you can see there's, a lot of altcoins that are, mooning right now. So it's good information to have. And then we can see what's really important is market caps, the total value of each project. Really important to see, and it gives me an idea of where the project is now compared to others. So that's really important to have. Other than that, you may want to follow specific people that do specific things. So, if you're not great at on-chain analysis, just follow the best accounts in the area. So for example, Will Clemente, which is, a group of people that, are called the Blockware team. They'll post many things and on-chain analysis. So what he's saying here, perpetual open interest has recovered much faster than expected, etc. He's giving you some great information, and his job is to do this. And so he's going to be able to spend much more time than you and I on specifically that area of the market. So I don't have to be an expert in every single area because that would be just impossible, but I can get information from experts in those areas and then piece it all together and use that as part of my trading. So absolutely, you need to get your trading set up in the right place, get everything really as you want it. Something else you might want to very quickly look at is something like Bitcoin Fear and Greed Index. It's okay, but it gives you an idea, right? So obviously, when this is in absolute fear, that's when I like to go to work and buy some more Bitcoin for my long-term strategy. Ethereum Fear and Index is the same. Use these and all this other information as a starting point to really soak up a lot of the information from the market that will actually influence how you go and trade after that. Once you've got your news in place, we need to set up our trading screens and put some technical analysis on the chart, find some areas that we need to trade around. We don't have to overcomplicate this. It can actually just be very simple. And it's really about feeding where the market is and then seeing where the chart is to tell you, is this a right time to get in or should I just not trade this? That's really as simple as it gets. Before we get into that, just do want to plug my crypto course right here. If you want to get serious and learn from start to finish, how to trade cryptocurrency, learn about cryptos, learn about how to research them, doing tokenomics, doing on-chain analysis, and a massive section on trading. There's over 100 videos right now. It's a one-time purchase, and then you get all lifetime content for free. So the course content is updated a couple of times a year with new content. The price goes up at that time, but it's free for existing users. We have Discord groups as well. Lots of different groups on there for technical analysis and investing. I'm in those groups if you want to ask me questions as well. So do check it out if you are, looking to take these more seriously. I'll leave the link in the description. We're going to get right into trading though. So I'm on Bybit right here. I'm going to look at the Ethereum chart to trade. So I've done all my research, I'm in the market, I know all the news. Now I just want to put some areas of value, as I call them, on the chart to really see where we want to trade. The first thing you want to do, if you're a day trader, then definitely look at shorter term timeframes. Now I'm going to be using the derivatives right here, perpetual futures. You don't have to trade futures. If you want to know how to trade futures, some of the pros and cons on Bybit, I'll leave that video linked in the description. If you don't want to take the extra risk that is associated with futures, then just trade in the spot market. When you trade in the spot market, it's cash settled. There's no leverage. You just use cash to buy and that's it. There's some downsides in that you can't go short, you can't leverage up, and it's slightly more expensive to trade. It's not going to make much difference though. But if you are an absolute beginner, spot market, if you're taking it a little bit more seriously, the futures market, because there are some advantages. So just keep that in mind, whatever one you want to do. What we want to do though is set up a day trading setup. So for sure, I'm going to look at the day chart. So I'm on the candlesticks right now, looking at each candlestick being a day. If you're a day trader, you're trading kind of more short term, you might want to go down to the 4-hour chart. It's going to tell you more about where the short term trade is. What I can see right here is I need to find areas of value first. So I'm going to go to a 4-hour chart. And then I'm just going to find some areas of value. So you can see I drew this yellow line on here. This is really a level of support that I can see for the price. So this is kind of confirmed a few different times. You can see a big area of support here. Then it kind of trades above. It finds an area of support right here as well. And then it drove down and found support there as well. So I'm going to use this yellow line kind of as a rough guide. So when I draw lines, I'm really looking at above and below the line as an area of value. It's never going to trade always to the line, but if you just have an area of value somewhere around here, then it's going to give you kind of a better understanding of where that support is. Why is it important to find an area of support? Because this is going to be our risk mitigation. When you enter a long trade, you want to find that area of support to put a stop loss in place. The next thing I want to do is find kind of areas of value on the chart set in a secondary sense. So what you can see here is I've drawn this box on here. We are in a period of consolidation right now, and I don't know what is going to happen to the price, whether it's going to go up or down. However, I have this area of value to the downside that my stop loss would be in. So what I'm looking for is some sort of break out of this consolidation. If you want to go long, obviously you're looking for an upside break. How do we know that? Well, I'm going to use 3 moving averages really to tell me where the trade actually is. So I'm going to come over to indicators and I'm just going to use moving averages. They're very simple. I'm going to put 3 on the chart right here, as you can see, and I'm just going to change these. So what I want to do is actually change this to a 20 period moving average, a 50 period moving average, and I'm going to put a 100 period moving average as well. So the 20 period moving average is much shorter time frame. So that is 24-hour periods because we're on the 4-hour chart. So that is a 4-hour period for us. If you're on a day chart, then a 20 period moving average is obviously a 20-day moving average. So you'll just have to, kind of know that When you go down to a 15-minute chart, then you've got 20 15-minute periods. What's this telling me? Well, the shorter time frame period moving average is telling me where the shorter term trade is and the trend. And then the longer term is obviously the longer term trend. What I want to be looking for is crossovers of this, moves up and out. That is really where you want to trade, because when you're day trading, you want to ride a move. When you're going long over the long term, you just dollar cost average in. When the price falls off, you buy a dip. That's long-term trading. When you're short-term trading, it's all about riding moves. So what I can see here is that we have this area of consolidation and we have the moving averages. You can actually see that a lot of these shorter time frame moving averages were moving down through the longer time frame moving averages. So obviously a bearish move here. It kind of bounced off of support, came back down again. And now we're looking at all of kind of the moving averages converging. This is telling me that we are in a massive area of consolidation because all the moving averages are basically the same, which is telling me the price hasn't moved. This is good for me because using news and events and what I know is coming in the future, this is probably a good time for me to trade. Now, I may want to wait for confirmation of this. And what you can do is take this shorter time frame moving average and wait till it's moving through the longer time frame moving averages, telling me that the confirmation of the short-term uptrend has happened. And that's when you want to ride that move. Or if you want to, try and get in a bit earlier, you can do that. But confirmation happening is usually a good thing. So what we might want to do here is look around this level, look for the blue to start moving through, look for a potential breakout of this consolidation period, and then go long and move a ride up. Where would you look to take profits? At previous levels and areas of value, which would be around here, 4,500, seems like a good price. Or if you want to ride the move further, will it continue a very bullish move up to 4,700, 4,800? So what you can see right now is that what I've done is I've found areas of value on the chart. I've found areas where the price could go down to so that I know where my stop loss will be. And I know areas where it could possibly go up to because it's been there before. And there's been chop and trade around that level as my take profit. So the next thing I want to do is a couple more indicators. This is just for day trading. Now, this you don't need. I think that's enough for me. But if you want to, get a bit more in depth, we can use the MACD. The MACD is going to show us, again, it's really just a kind of indicator of, where trade is. So essentially what you want to happen is you want the MACD line, I'm sorry, it's kind of not visible here, but you want the MACD line to be crossing through the signal line, the MACD to be crossing through. So what happens when this crosses through is that it's telling you that there's a kind of bullish or bearish crossover. When it's moving from a low position up into the higher, going through to the bullish side, that's obviously a bullish crossover. That's a kind of confirmation sign that short-term trade is trading up. That's a good sign. When the signal line moves back down, obviously that means it's a bearish crossover to the downside, maybe not great to go long. So this is kind of a very simple indicator. When we're getting a move up through, it's just confirmation that, it might be a good time to get in. It's not going to tell you when is a good trade. You have to use it with areas of value and what's going on in the fundamentals as well. The next indicator I want to put on is ATR. Average true range is going to tell me the biggest possible one-day move in the asset that I'm looking for. You can see the ATR is coming down here. What's that telling me? It's telling me that basically volatility has been removed from the market, right? The ATR, the average true range, is the biggest possible move that can happen in that asset in one time period. And as it's coming down, it's telling me there is no volatility here. And that's exactly what's happened. You can see we're just trading sideways. Once this moves, and you can see here, there's a big volatile spike down here, the ATR went up. So it's telling me how volatile the price is. It's telling me it's not volatile here. And actually the volatility is historically very, very low. That could tell me that we are also potentially in for another volatile period after consolidation where the price is going to move one way or the other. In my opinion, based on fundamental analysis, news and events and what's happening, plus the very strong area of support down here, would be biased towards going long. So taking my stop loss somewhere beneath this area of value and having a bias towards going long, seeing it move up again. So what we're in is a period of massive consolidation here, which is a pretty good thing. And then we can use this to input our trades. The next thing I want to do before actually putting in an order is working out what my potential profit and loss would be and making sure my risk reward is in the right place. If the chart is telling you that this can't happen, just don't trade it. Don't trade it, move on, wait for a better chart or trade a different asset that is actually showing you that it might do well. So what we want to do is obviously we've got these levels in place now. So let's say that I'm going to go long as a bias. I have my potential downside and a potential upside here. What is the actual potential profit and loss of this trade though? Come to the calculator and we can put this in. So let's say I'm going to use 2x leverage. You don't have to use leverage and don't do that if you're a beginner. And let's say I want to trade half an Ethereum. And the entry price, 3,900. Let's say, we want to get in around this price. You can see the price is just coming down off of this resistance right here. So let's say we want to get in around, let's say around 3,900 and the close price. So I've seen that the potential upside for this, if it goes bullish, is a potential retest of this level right here, which would be around about 4,500. So we can see the profit and loss right now. So the ROI is 30%, but what we're looking at is a P&L of about 15%. So that's great. That's obviously with 2x leverage, that will be 15%. If you want to have 3x leverage, then the actual amount of your profit and loss will go up, and the margin that you have to place on account will go up as well. What is the potential downside though? So my profit and loss is 15%. The potential downside would be around about 3,700 or 3,600. That is when the price would fall below previous levels of support that we would have to just get out because the trade broke down. So let's say 3,600 for an exit, and our profit and loss would be minus 7%. That's a good risk reward ratio for me. So that's literally a 7% potential loss, but a 15% potential win. That's a good risk reward ratio. You really want like a 1 point something, right? So if you're 50-50, if a trade is going to work out for you as a potential 50, a loss of 7 and a win of 7, it's a 50-50 trade, probably not great to get in. You want like 1 point something. So, 1.2, 1.5, so more than that is, would be a good ratio of saying, well, there's a potential downside and a potential upside that's much larger. So looking for that potential risk reward would be decent. If it's going to be the same, don't do it. So I would say that is a good potential risk reward here. Do I want to get in at this level? Do I want to maybe wait for it to come down even to this level, which would essentially make my entry price even lower? That's obviously up to you, but that is definitely something to consider is your risk reward ratio. So just from a practical standpoint, if you don't know how to enter orders on the futures screen, I'll show you how to do that. Like I said, you don't need to trade futures, but your entry price, you want to use a limit order. So you want to open, limit order would be 3,900. The quantity, whatever it is. And then you want to buy along with a TPSL. So click on this. The take profit we know is 4,500 and the stop loss is 3,600 or 3,700. What the system is going to do now is enter 3 orders for you. A buy order at your limit price, a sell order above your limit as a take profit, and a sell order below your entry as a stop loss. Your risk is absolutely known when you enter the trade. You don't have to use a stop loss and a take profit, but if you're trading short term and day trading, it is highly recommended, especially a stop loss, because futures can really get out of hand. If you're on the wrong side of a trade, which you will be at some point, a stop loss will mitigate your risk, and stop you from kind of a liquidation event, as you can see here. Getting liquidated is expensive. Your account will be wiped out and you pay extra fees as well. So a stop loss is highly recommended. Or if you're a beginner, just use the spot market and you don't have to worry about getting stopped out or anything like that. But a stop loss may be also recommended if you want to trade short term. When you're happy with that and the amount, just click open long. That will go through and come over here as a position. The last thing I would say is, definitely with things to consider, what you want to make, the market doesn't care. If you want to make $100 a day, if you want to earn X amount a day, the market doesn't care about that. If you want to project what you want to earn onto the market, you will lose. You only have to enter orders, enter trades that look like they're in a risk reward that is good for you. If you enter trades that are bad in the hope that you make $100, you will be losing. If you don't trade the right chart, and if you don't wait for the right setup to happen, that will also be a losing trade. So mindset is very important. That's something that I can't go over too much in this video. But if you do want to look at much more in depth about mindset, trading, how to actually trade, how to do technical analysis, everything like that, check out the course. It's a one-time fee. All future content is added for free for existing users, Discord groups and everything like that. Check out the links in the description if you want deposit bonuses on the platforms that I use. More helpful videos I'll list down there as well. I'm James with MoneyTG. Cheers for watching, and I'll see you in the next one.